All right, let's jump into things. Bit of the weekend review. So where are we at? 3:48 on 17th of August. So it gives us a chance, to obviously, just sort of again see how the week sort of finished up on that, and sort of anything sort of developing over the weekend. Obviously, with all this sort of Trump, Putin stuff sort of happening, and see if we can sort of mark up some charts and pick out some trades for this and themes for this coming week. So, look, first of all, sort of, I guess what we've got sort of going on over the weekend. Uh, so just picking out these days, I think I'm on the wrong week. Yeah, regardless, over the weekend we got well Friday night, Saturday morning local time, and that we had sort of Putin and Trump obviously get together and have a bit of a meeting, and pretty interesting, but kind of uneventful with the outcomes of it all. It's sort of like seemed very sort of like jovial, sort of nice, big smiles, handshakes, and all this, and I think like, I mean, this is beside the point of it all, but I think they do have some sort of mutual kind of respect for each other. As much as sort of everyone, like, it's funny, you look at the news and it's like Putin played Trump and all these kind of things. Like, these guys are not, like, as in US and Russia, aren't exactly on the best of best terms kind of thing. I actually saw some sort of report sort of saying, relations between the two countries are at the lowest point since the Cold War. Um, so I think it's a bit rich that sort of like these guys get together, and I think it was expected to go for 7 hours, which is incredible. But it went for 3 hours, and as I said, I think it's a bit rich to sort of think that you're going to have this great sort of resolution, 100% only favoring the US after 3 hours, particularly when the US is kind of like acting as a mediator in this, because obviously it's Russia and Ukraine that are sort of going at each other. So yeah, look, they didn't sort of get the ultimate sort of ceasefire kind of thing, but now they're going for what they've sort of worded as a peace agreement. So the next sort of development with that is now that Zelensky's going to Washington, and obviously he's going to have a chat with Trump. So it'll be interesting to see, one, if he wears a suit this time, and two, if he sort of is as hot-headed as he was last time. Because as you remember, last time he had a chat with Trump and J. Vance or whatever it was, that didn't go particularly well. But regardless of it all, the point is, I don't think there's any sort of anything that's come from it which is really going to see sort of massive explosions sort of come. Oh, sorry, I just realised I was on the wrong month. That's why the dates weren't lining up. I don't think it's going to be anything. It's going to be fireworks come Monday morning, sort of on Asia Open for the week. So look, we'll see how we go. I mean, these things can sort of obviously tick up and down all the time, but from what I saw before, I think the weekend rates are looking pretty much sort of flat. Actually, I might just be able to grab a couple of headlines there. Boom, and so for what it's worth, there's some weekend rates that we've got coming through, and as I said, sort of like these are obviously minute, next to nothing sort of changes of that. Mainly gold was the one that we were probably expecting to see a bit of a movement, but of course equities, euro kind of as a proxy for US dollar as a whole, DXY obviously being pretty much completely inverse to what euro's doing. So look, minor change. This is typically what you see with the weekend rates. Like typically you're not seeing anything massive. And that's why when we had like, a couple of weeks back, we had sort of all the tariff things happening, we had the wars happening. Some of these movements were like 0.5% or like a full percent on the moves. And that's when you're expecting something massive come sort of Monday. But at the moment, things are looking pretty flat. As I said, it's 10 to 4 on the Sunday. So, just what have we got? 15 hours or something till market opens for the week. But look, we'll see how things go on that. Gold obviously ended up on the sort of on the back foot, right down on support. So we'll see if there's any sort of trimming of that, sort of like on Monday morning. But obviously, we'll get to that when we get to the charts. So having a look through Monday, typically kind of quiet on the news front, and doesn't look like there's a great deal, nothing really sort of note here. I guess trade balance of euro for what it's worth, but not anything that's really going to be market moving. Through Tuesday, a little bit of PPI data for New Zealand, but again, nothing really massive for us there. CPI in Canada, how are they doing? Around 3%. So they're a little bit stickier than we've sort of seen with a couple of these other ones. And again, look, all these sort of different economies and central banks, they break things up in different ways. They've got trimmed, common, core, median. I mean, how many different CPI prints do you need in one go? But main sort of thing is that I think they're probably looking at the sort of trim. Now, trim would be the same as the core, I imagine. Sort of, you got the headline there for the month. So looking for a little bit of a tick up actually month on month, and pretty flat with the other one, slight tick up there as well. So I think this could be a potential sort of, so inflation has been like the big sort of talking point for like the last, what, 2 years or so? Come down, come down, come down kind of thing. And it all seems to have leveled off, and I think now it's kind of like, it's a little bit elevated, but close enough to the band, but it's proving to sort of hover a little bit around these levels and that with a couple of these economies. But really, again, I mean, that's like trading CAD. That's not really going to permeate across to the rest of the market. It's just interesting to see how a couple of these other people are doing. GDT price index. Only point this one out because this is like milk prices or something. Where are we at? Change of price in the dairy products and that, which is kind of seemingly unassuming sort of bit of data. But years ago, sort of when I was trading like a little bit of everything and that, I noticed that this one can actually move, or at least back then, we could see New Zealand dollar fly on this, which is again, it's a very unassuming sort of bit of data, but something interesting, I suppose. Move along. So Monday, Tuesday, pretty quiet. Got a bit of China data and that, coming in flat with the rates there on. Uh, where are we? Wednesday morning, so 11 o'clock there. Got the rate decision from the RBNZ, and they are looking to cut. They've been quite aggressive with their cutting, actually, because New Zealand, if I recall, they got up quite high, 5.5%, and they're sort of really sort of hammering this back down here as well. So it'd be interesting to sort of see, I guess, how that sort of affects New Zealand dollar, and obviously Aussie is a little bit of a proxy of it, but I wouldn't be surprised if we see this actually come in with a cut. As I say, I don't really follow New Zealand dollar super closely, but again, it's just they're in the local area of Aussie, so it's interesting to sort of see what they're doing over there as well. CPI out of England there, and slight little tick up, and this is what I'm saying. It's like these guys are actually still quite elevated, actually. 3.7%. So, what I mean, you probably want to see them sort of trying to do something pretty quick with this one. But as I said, it's sort of like everything seems to have even sort of leveled out, or maybe even slight little ticks up kind of thing. And I guess that could actually come across everywhere. Obviously, we have PPI coming into the end of the week, which actually we should get onto. Oh no, we covered PPI earlier, didn't we? It was retail sales that were really a bit of a nothingness for US dollar coming into the end of the week, and also consumer confidence as well. But back to this, we've got CPI coming from England there, and it's looking to be a little bit of a tick up in that. Again, it's one of those ones. Pound, yes, makes up part of DXY, but outside actually GBP pairs, it doesn't really sort of permeate across the rest of the market too much. We've got Euro CPIs coming through here as well, and they're right down in that band. 2% is pretty much the target, and they're pretty much within striking distance there. Moving forward, we've got Walla. Okay, so really, actually, it's looking in terms of sort of what's going to be maybe affecting sort of US dollar, Aussie, these kind of things, the main things that I trade. Not a great deal, sort of through the start of the week. New Zealand and China, a bit of data on Wednesday, but that's about it so far. We've got Walla speaking on Thursday morning, Wednesday night, and remember, Walla's one of the dissenters. So he's the one that sort of is very much pushing for those sort of rate cuts to come a little bit earlier, which we've seen recently can affect the market a little bit. We've got the minutes coming out after that. Be interesting to sort of get a little bit of that, but again, we see these speakers coming and going so often, and that don't know how much this is really going to affect the market. You know what I mean? There's no real sort of like, oh, shocker, that's how they came to this decision. I mean, you got the press conference after the FOMC, and then you have these speakers, 4 or 5 times a week, pretty much. I mean, we got Bostic sort of speaking after it as well. So, I don't know if we'll get too much sort of new data in that, or new information in that, so to speak. Move along, we've got Aussie manufacturing PMIs and that. These are the ones with the sort of 50 base point. 50 base point, or just reading of 50 as being the baseline. Above that, obviously, is expansion. So this has been revised down a little bit, and services revised up. So yeah, that probably makes sense with sort of what you're saying. I think we see services are probably picking up a little bit over manufacturing elsewhere, like in other economies as well. We got inflation expectations, 4.7%. So there's a graph of what they've been thinking. So it seems to have slightly up, but moving in that sort of downward direction. Again, it's just not one of those ones that's really going to sort of move the market a great deal. Uh, PMIs all through the rest of the Thursday session there, and we've got the Fed manufacturing numbers here. These are a little bit all over the place because obviously different places, but this is Philly. We had Empire State last week, and Empire State beat, if I recall, quite drastically. Real quick look back. Start now. Okay. Okay. Well, as soon as I can't find those ones, but we did actually. The Empire State did beat quite strong. So yeah, it'd be interesting to sort of see if this sort of follows suit. They're obviously expecting a fair little bit of a slowdown in the numbers there. So yeah, so back we're saying PMIs also through this Thursday. Again, look, they're not massive market moving things. They can get little sort of knee jerk reactions. Particularly the French, I actually notice actually sort of has a little bit of a move. But what I tend to find with these things, obviously, because it's all euro, 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 you may sort of see one move up and then the other one just recounter it. So yeah, they're not sort of anything. I'm really sort of saying, okay, the market's going to be sort of pricing themselves prior to this sort of data bits of data coming out. But again, look, they're all fairly flat, a bit of a mix of it all. Services outdoing, services outdoing across the board with these ones here. French actually looking a little bit weaker of the other sort of euro and obviously pound or UK bits of data there. Move along, we've got unemployment claims, again, back in the 20s, and it's kind of stabilized a bit here because I think I've covered this most times of that. We sort of spike up to around these 40s for a little bit, obviously pull back down into this area and just really sort of hanging flat. So again, these ones are kind of little things to watch out for if we do get a big pushback. So if we get a push and somehow it sort of comes up to 240 or something, that's going to be a bit of a hit because again, the dual mandate, jobs and inflation. And now we're really getting a bit of a mix of the two because, of course, last week we had CPI come in. It was flat from last month, but below market expectations. So market was pricing for a tick up of it all, but it came in flat. But it doesn't mean it's going down. And I covered this, I think, on the Thursday or the Friday with it all. So it puts a question mark on it. It's not a clear cut sort of thing. And then we had PPI beat quite drastically. Drastic beat basically came in a lot hotter. So the question is still, are the sort of is the inflation going to sort of permeate out through the rest? Well, the idea that PPI was up a little bit could be the early indicator because if it's coming up more at that sort of wholesaler level, well, most likely they're not going to absorb that cost, and we're going to see that flow through to the consumer with the CPI. So that could be in the back of people's minds. But again, the jobs were another thing that Powell said could sort of sort of force his hand a little bit as well. But as long as these are stable, it's not like sort of NFP or anything like this because this one's obviously coming out weekly as well. But as long as this is stable, it's a bit nothingness. It's only once this one starts to move, say back up to those sort of 240s, or maybe even if it dropped down, I don't think it's about to. But if it dropped back down or moved up out of that sort of 20s level, then we might see the market take notice a little bit. But short of that, I don't think they will so much. Having a look, we've got PMIs for the US. PMIs for the US are probably something that people will be sort of pricing a little bit more than sort of, say, a bit of this Euro sort of data. They don't really pay attention so much to this, or it doesn't move the market and hold so much. And these ones are both looking to sort of tick up here a little. Actually, sorry, no, we're looking for a little bit of a move down. What was this revised from? 55, so it's revised up a little bit, but expecting a little bit of a slowdown here. And this is a big thing with US. It just needs to see constant, strong data because the market's just got such a sour sentiment on it. Any bit of sort of weak US data, bang, they're happy to sell it. Moving through from this, we got consumer confidence. No, that's not looking too good for the euro. Minus 15, still coming in flat. And then not really much. We've got Jackson Hole. Okay, so Jackson Hole sort of starting up next week. So I would say that's probably going to be the talk of the week in terms of data, well, headlines, this kind of stuff, because obviously this is a big meeting that all the sort of head bankers and all these kind of people sort of get together sort of once a year. So I would say that's probably what the market's going to be moving, looking towards. And obviously then over the weekend, we've got Powell talking at the end of Friday, moving into Saturday morning, and a continuation of Jackson Hole. So you might see a little bit of sort of talk about the Jackson Hole sort of coming up into the end of the week. But prior to that, look, it's looking pretty quiet on the sort of data front. So we'll see if we just see a bit of sort of continuations from next week. We got Trump's meeting Zelensky on the Monday, I think local time in the US, so Tuesday or so in, or maybe late Monday night in Melbourne, so Melbourne time. So these kind of things obviously could sway the market a little bit more just with those headlines. But in saying that, we'll jump onto the charts and see what we can sort of pick out. And we did have Aussie sort of, do this nice little sort of pushback down from, this was when we had the employment data. Was that the Thursday? Yeah, the Thursday, and obviously market just sold into it, and then a little bit of a grind back up through Friday. I would have thought this would have actually probably held a little bit lower than the 65, but obviously managed to rally above. But I did say on the Friday that any sort of move up until these 20s, because of course, this is your sort of support area through here, but they came into the sells over there. So structurally, it is holding to the chart. I think if you see another push past 20s, then it's just going to be a big sort of range of back and forth and that. But I guess pretty much up to 40s, similar sort of thing where we've got the sort of sellers here. I would say that would probably provide you with a little bit of a sort of upside target, or at least expect a reaction like we did from this 20s to sort of sell back down into it. Obviously, sort of coming into the weekend there as well. So for me, look, it's obviously got a little bit of work to get back down here, but I would say, again, you can see that obviously this is that level that it held sort of Tuesday, flew up coming into that data, very quickly back down into it. This is going to be the trigger point for Aussie to sort of get down underneath here. Obviously, there's a couple of other levels moving down, but if we get down underneath 64.80, I think that's going to open you up. The next sort of target that we'd be looking at is obviously 64.50s, and then sort of moving back down to that's the sort of the bigger test down there, 64.20. So there for me, there's sort of two levels that I'd be kind of looking at on any sort of US dollar strength, which as I've said, I think is just going to affect Aussie a little bit there. So need to get this one here, and this will be a break underneath here. Direction, boom. So obviously early indicator with this will be the break of this kind of sort of semi-rising support. It's not really like this is just a bit of a bear flaggy kind of sort of setup going. It's not really because we haven't got enough touches both sides to really give it a strong confirmation that that's what the market's looking for. But if we look at this in terms of retracement, that's just coming up just just shy of the 50% retracement, and that I still think that even if this comes down here, we could very much see a rally and sort of consolidation around this area over here. Markets obviously sort of just been buying the dip like crazy on Aussie for a long time, but I think sort of certainly if we can push down and we can continue this flow here, so leg one, leg two, and then we come back down and tackle these lows over here and break through, I think that'll sort of give a bit more sort of confidence to further correction in that. But at the moment, we've got this kind of move down here, support, move up. We've found resistance where we find resistance at previous support, so that everything's online there. So we need to have this kind of leg down here. This could be it at the moment, but as I said, last couple of hours of the week, I don't really sort of put too much stock into. I would say your target at the moment is driving back down towards 64.80s and then seeing what happens once we come into this area here. And if we break it, well, we've got our targets of where we're looking at once 64.80 breaks. But of course, to get down here, to get down to these levels over here, obviously we've got to break these levels here first. But just as a structural move, I would say the fact that it came back to this support area so quickly in such a dramatic fashion means they're definitely happy the momentum's shifted obviously for a downside push. We've got the push up. We need to see this leg here, in my opinion, and I think this will probably come back deep. Even if this is to sort of recover, and then we see a move back up and it goes back through like this, and sort of like starts to shift and dribble back up. I'd expect probably at least a push back down towards maybe the 90s. And if they can if the buyers can sort of show their commitment and hold 90s and then sort of tackle back up towards those 20s, I think that'll be the indicator that again, the momentum has shifted to the top side. And then we look for a break of these previous highs. We look for the next targets moving up through there. But I think initial moves in that are probably going to be back down towards 65, 64.90, and then sort of basically see what the buyers do at that level. Gold looking like it really wants to really wants to go, but of course at a very slow snail's pace. So you can tell obviously this is just where the buyers are holding, and this is just in our little sort of short-term area here. You know, they've been tested a number of times. They've been tested a number of times. This is the area that we want to see. So I'll put alert. Look, I'll put it actually just under those wicks, so underneath 30. And that'll be sort of a confirmation that we're probably going to see a little bit of a leg down further. Again, this is one of these ones, not a perfect kind of bear flag. It just gave us a bit of an idea of where they sort of might be heading with it. Around that sort of 33.10, 33 to 33.10, I think we'll probably see some levels of support coming in. Probably using about 8 of these charts, and you get conflicting messages with it all. But as you can see, top end of this little zone that we had back up here, which was obviously that sort of little sell down. I imagine that this is an area. I'll clean these charts up. I think I said to do it the other way. I think this is pretty much an area where we could definitely at least see some sort of reaction. Doesn't mean it's necessarily going to be like the bottom, but within that sort of 33 to 33.10, I imagine the buyers to give it another go. And then it's all about that next effort. If we see another effort that sort of pushes down through it, then 32.80 is kind of the level that we want to see. And of course, that's then coming into your major breakdown zone. So, there's a lot to sort of unpack there. But as I said, I would have thought that it may have had a bit more of impact with the sort of stuff going on over the weekend. I think certainly that's the reason that we didn't see any rally attempts with it, even though we saw US dollar gets sold down pretty much all through Friday's session. Gold at its best, gold at its best moved up, $20. So a very sort of tight little range here. So actually, while we're doing it, you could probably almost sort of put this on it and just sort of say that's your little consolidation zone, little breakout box. And this will probably give us a bit of direction. If it is going to rally up, look, it's not to sort of say that it is dead. I am still looking for this move to the downside over here. But based on the fact that obviously even just in this small little section here, we've come into it, we've consolidated, it favors the idea that you see a continuation. So I'd be looking down at sort of 33 to 33.10 to sort of see what the buyers do there. I'd expect a reaction here, but certainly if you see a push down into these zones and you get your reaction, which I pretty much guarantee you will, if we see them come back and have another quick run at it, that'll be the time that we look for a break down through there. So I wouldn't expect this thing to cut through straight away. I'd expect a reaction, but that second effort is something that I'll definitely sort of be paying attention to, because if that second effort goes through here and we see a little bit of a sort of a continuation of that sort of momentum, we kind of pretty much know where it's going. It's going to go to 32.80, and then we're sort of coming back to high time frame supports. Down at that level there. So yeah, I'll be looking a little bit, at least sort of through Monday, downside moves towards that sort of 33.10 area. Have a look at DXY, because obviously we got that nice break. This is just such typical sort of DXY action. I would say, I think it was around here on the Friday. I'm like, look, if we see a rally up, it's going to get knocked back. We're not going to get any breakouts till retail sales. And it thought about it for a second and then just dribbled and dribbled and dribbled and dribbled. And this is the thing I've said with DXY, like, it's, apart from the fact that it's frustrating as hell, it's not afraid of doing 78% retracements and then sort of moving back up. So this was obviously that area where we had that gap. We had this nice break, bang, off the top up here on PPI, all this kind of stuff. And then it just fell on its nose. Like, it didn't do anything. It wasn't even kind of like a, hold on, let's rally a bit, boom, rally a bit. No, it was just sort of like, if you didn't take your profit, well, tough luck. It's all the way back down here. And this is the thing that I say to people about sort of this kind of trading. Like, it's nice to sort of think, hey, look, I bought the break. Here's the retest. Here's the higher high. I take my buy here. I follow my stop up with it, or I put my stop to even, or I put my stop below that last low. Well, the market just comes back and whips you out, and you got this nice big move up through here, and you made absolutely nothing through that whole period. And I mean, look, each of their own with however people trade, but I'm just saying it's inherently difficult to get these big home run sort of moves that actually don't come back. Like you need to really sort of kind of take a bit of a gamble with these things because, as you can see, it's very much sort of going down, 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 down. There's got to be something that's just bought here just blindly, and then okay, move stop to even, and even in this goes up, bang, all the way back down. And on the larger time frame, we're back at the 78% of this larger move that we saw off the actual lows. So this is back at the 78% here. You can see it in the green. And if we look at the move that actually just sort of came from Thursday or Wednesday or whenever it started, no, Thursday morning, bang, back to the 78% of that as well. So look, again, I think we do have upside to come on US dollar, but I think the true like tester for it, or the true sort of like time that we see it actually move and hold some of these sort of top side moves, is having back-to-back stronger data. Because as soon as you get something a little bit of a crack in it, market's like, nah, I don't want a bar of it, and they just dump it off. So yeah, that's pretty much what I'm looking for. But as I said, it's very much there's a heartbreaker. This one, it's a heartbreaker. That's what it's been nicknamed as just now. Anyway, look back at these levels here. This is where we had support before that little push up. Market obviously thought, hey, look, we'll take out the lows and rallied a little bit into the end of the week. But again, last couple of hours of the week, you can't really put too much stock into it. It's not really too much sort of going on with it all. So I think if we can get above these wicks, so this was a little rally that it had around that time that we had retail sales come out. And actually, if we have a quick look at what retail sales did, so this is back on 10 to 16 here. So this is on Friday. We can have a look at a little bit of this sort of data here. So we can see sort of like in this. This is what I don't know how could I not find this 2 seconds ago. Anyway, yeah, this is what I was saying. Empire State, we did beat quite substantially with that sort of with that data there. But we got retail sales revised up from previous, a little bit up there, a little bit up there, and then obviously back down, so slower here. And it was a bit of a mix of this, and I think we had somebody talking just after it as well. Doesn't seem to be marked on here, but I'm sure one of these Fed talkers were having some comments and that just after this as well. So, as you can see, if we get back to US dollar, you can see this little up, down, kind of sort of indecision around this. Like the market was kind of like, okay, sell, 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 ready for it, bang, up, down, mixed data, and then obviously just stayed weak coming into the end of the week. So I wouldn't be surprised if we see a little bit of a rally and correction of this pullback move here. I don't think this is really just going to continue on the way back down here without another bit of sort of like negative US data. Or maybe it could be, as I said, these sort of things, these talks with Zelensky and Putin and all this kind of stuff involved. But I'm not 100% sure if that's going to be the catalyst to break these levels down here, because obviously this grey level is quite a sort of high level support, high level support zone that we had marked out. Market held it through here. So this is kind of like another test of it all. If they can hold this area, take out that wick high would be something that's a bit interesting. So I'll put a little alert above this one. And this is above, let's just go retail data, spike highs through there, 98. So above 98, like 01, whatever, you probably see a little bit of a move, but then we sort of be targeting back up around these sort of 98.20s, that sort of move through there. But yeah, certainly very, very disappointing with it all. That's on the 1 hour. Actually, let's just have a quick look on this. So yeah, I mean, look, the RSI is very much, it's come back down to it all, but should it sort of find a little bit of a rally through this point here, I could see this very much just sort of turning back up over here. It's not right down onto its oversold area. So we'll see how this one moves. But yeah, it is just one of those things that's very, very frustrating. No, not really a big fan of that move there. But yeah, I think above the retail high spikes, and that could see a little bit of a squeeze. And move along, we've got copper. And copper's, again, just still grinding, sort of got a bit of a sell down over here, but I would say this is probably starting to sort of firm up a little bit of a channel that we can use through here. The angles match very nicely. We've got multiple touches down here, kind of multiple touches up the top over here now as well. Again, a bit of a dribble down over this side over here, and then possibly a rally continue pushing up over here till we get something, again, drastic with the news. I don't think we're going to get any major breaks. I am still looking potentially if we can get up to around this sort of 4.7, 4.717, this kind of 23% around this area here to sort of see some reaction from the sellers. And I'll probably try a couple of little shorts over this area as well, up around sort of maybe 4.7. Move along and finally just tick over with China with a yuan and still holding the grind zone. And this is the thing. This was the range that we had. Put it on the daily, you can probably see a bit better. Range you were in for a while, dipped under it a couple of times, dip it above, bang, back into it. I think this is, again, going to be that sort of level. 720 is still the one that I'm looking for a topside move, for a little bit of a rally of US dollar strength. So I think it will come. I think we are going to be moving up before we move down. But, of course, we're going to have to wait to see what US dollar does as a whole. But that's the second idea, excuse me, to move through that. That's the first idea, moving up the top side there. But this is not really doing anything. I mean, it's doing what it does, which is absolutely nothing and just grinding sideways. But it's back into this nice little range. We know where the buyers are. Obviously, a little bit of a dip down and quite a strong reaction as it did sort of dip down underneath the sort of midway sort of support. So I'd expect at least a test up towards that sort of 720 zone and a breakthrough the 720. We're coming up to this higher time frame resistance area, because it's taken a little bit to get back to it, a little reaction, but a second effort and push that one through is probably what I'd be looking for, this kind of move here, to move through it like this to the top side there. And again, this is the kind of stuff that you'll probably see at the same time. US dollar, obviously DXY will be rallying or pushing probably a little bit on this, but Aussie dollar probably failing a little bit. And I would say that would be about the same time that we see gold fall over. If we do see a push up through this sort of like 723, 724 area, to me, that'll be the time that we're starting to get a little bit more of a decent pullback on gold. So maybe it could be moving up 722 around the time we get those 3280 tests, if that comes, and then sort of like a pushback there, because we'll definitely get a reaction from 3280, but a second push through here, I reckon that'll probably be about the same time that we see gold push that through those 3280 support zones there. So all in all, not a great deal sort of in terms of data and that sort of coming up this week. A couple of bits and pieces, but yeah, it's pretty much like that probably for the next couple of weeks in that till we get back to September, because of course it's still summer over in Europe and in the US. And I think sort of once that's sort of cleared and out of the way, then we can probably maybe get back to some more trend trading. All right, that's it from me.